Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. With me is Shail Bhatnagar. Well, on Tuesday, the domestic equity indices did end sharply lower in trade, with the Nifty falling below 24,200 mark. And the Nifty yet again faced that pressure above 24,350 and swiftly reversed from those levels. And this was once HDFC Bank started to decline in trade. And Nifty's fall on Tuesday largely came in from HDFC Bank's shares, which were already down 11% from the July 3rd peak, and on Tuesday they saw another 3% drop, and about 50% of the losses on the Nifty yesterday were contributed by HDFC Bank. And today, as we move into a new day, it will be the weekly expiry for both the Nifty and the Nifty Bank, as Thursday will be a market holiday. And of course, we will be seeing whether this right expiry of two indices right ahead of the truncated holiday will make markets even more volatile from here on. Good morning to all our viewers, and good morning, Shail.
Good morning, ladies and gentlemen. A very warm welcome to you all on Wednesday. Firstly, many congratulations on Independence Day. May we all be independent of debt. May we all be independent of unnecessary EMIs, and may we all chart an independent future as far as markets are concerned. Remember, they are the only place that can make you truly independent and a master of your time, as long as you spend the maximum time in the markets rather than trying to time the markets. So with that, ladies and gentlemen, let's begin our conversation for Wednesday. As Sakshi has pointed out, tomorrow is a holiday, therefore the weekly expiry of the Nifty has been pulled a day in advance, and today we not only have the Nifty expiring, we also have the usual Bank Nifty expiry as well. Yesterday was a debacle on HDFC Bank, and Sakshi has explained that 50% of losses on the Nifty, totaling about almost a percentage point, were because of HDFC Bank. Well, in the Bank Nifty, which fell about 750 points, 650 points came from the red 3 percentage point downtick on the HDFC Bank, and that's the reason, ladies and gentlemen, why Bank Nifty is more precariously balanced than the Nifty. Let's look at the daily chart of both these indices. We'll start as usual with the Nifty. You will see that the index is for the last 5 trading sessions in a sideways narrow band. You have strong cues coming in from Wall Street, so probably you will have an early morning bounce, but down 0.7% over the last 5 trading sessions. This is possibly the third week where you will see a negative tick. Remember, previous to these 3 weeks, the one that is also continuing now, for the past 8 weeks before these 3 weeks, the Nifty had gained 2,000 points. So far it has corrected from a high of 25,078 to what is the most immediate low, which is 23,893. Let us see whether that's tested today or not, but the mood somehow seems to be sell on every rise, and that's mainly on account of the political slugfest that is now happening between the ruling BJP and the Congress party on the Hindenburg crisis. The markets have ignored it, sidestepped it, but you see continuous selling pressure as far as markets are concerned, and that's also because foreign institutional investors remain net sellers. Sakshi will give you that number, but in the past 15 trading sessions, actually 16 trading sessions, they have sold in 15, and that's the reason why the upside seems to be capped over the last 2 weeks. So from July 23rd, that was the day of the budget, till today, they have been net sellers to the tune of about easily 27,000 crore rupees. Let's now look at a little bit deeper as far as markets are concerned. So an early morning bounce, which is most likely to be sold into, so option sellers will be in action both on the Nifty and the Bank Nifty. You have both indices that are flat on a weekly basis, 0.7% down on the Nifty, 0.8% down on the Bank Nifty. We'll be focusing on strong earnings that have come in from companies such as Apollo Hospitals and Hero Motors within the Nifty space, and outside the Nifty it is GNFC and SGVN, both of them government companies. Hero Motors, the chart is right there in front of you, a very strong show as far as numbers are concerned. And of course, profit after tax for the first quarter rose 83% for Apollo Hospitals. So keep these two stocks in mind. The charts are right there in front of you. And of course, from the PSU table, strong set of earnings from SGVN and GNFC. Volumes will be thin today, mainly on account of indices being flat, but let's hope you have a decent bout of short covering coming in. On the Bank Nifty in particular, Sakshi, this index is now testing its 100-day moving average, and that's a bit of a negative, because generally what has been seen is that once the 100-day DMA is there and it collapses, if you see the daily chart of the Bank Nifty, since Monday, which is August 5, we've tested this 100-day moving average 5 times, every single day except the two, which is Monday and Friday. So let's hope this one stays, but once this breaks, you have 49,000 coming fairly soon on the Bank Nifty. With that, let's look at what you have to offer. What did the FIs do yesterday, and how did Wall Street close? I believe there was a very, very strong bounce.
Shail, we did see that the US markets overnight did see some sharp up move, and this was as a reaction to the cooler than expected inflation data, which showed that the producer price index rose just about 0.1% as against the expectation of about 0.2% rise that was expected. So the Dow Jones jumped about over 1%. We did see the Nasdaq jumping over 2.4%, and the S&P 500 also rallying by 1.7 odd percent. The US 10-year bond yield eased to about 3.85%, and we did see the gold futures hovering around $2,500 a level, and WTI crude oil futures around $79 a barrel as well. In the Asian markets, we did see the Nikkei advancing another 0.5% in trade, Kospi about 1% higher, Taiwan about 0.2% in the early morning trade, and the GIFT Nifty, like you pointed out, is now indicating a 0.4% of an uptick, or a 99 point of an uptick at 24,256. Overseas investors, they remain net sellers for the second consecutive day. They sold equities worth about 2,107 odd crores, while the domestic institutional investors, they remained net buyers for the 8th consecutive session in the Indian markets. They mopped up equities worth about 1,239 odd crore rupees in yesterday's trade. A lot of stocks that I'm keeping a keen eye out on. Nykaa is going to be in focus. The company has reported a 151% increase in its net profit, rising to over 13.6 odd crores, and revenue surged by about 22.8% as well. We've also seen the margins expand to 5.5% from 5.2%. Apollo Hospitals, like you pointed out, the company's posted an 83.2% increase in its net profit in this quarter. We've actually seen the EBITDA also rise by about 32.6%, whereas the margins have improved to 13.3% versus 11.5% over year on year. Hero MotoCorp, the stock was higher yesterday ahead of its earnings. The company has reported a 36% surge in its net profit, and this is on a year-on-year basis. Revenues have surged by over 15.7% at over 10,143 crores. EBITDA improved by 21% year-on-year, and the margins have improved to 14.4% versus 13.8%. Good set of numbers. Muthoot Finance, the company has reported a 10% surge in its net profit, which is now over 1,078 odd crores. The net interest income has grown by 21.6% to 2,352 odd crores. NMDC, the company has reported an improvement in its net loss in the first quarter, and that's reduced to about 547 odd crores versus a loss of 860 crores seen quarter over quarter. The revenue is increased by 9.6%. EBITDA loss also has decreased to about 401 odd crore rupees quarter over quarter. HEG, the graphite manufacturer, had reported a profitability figure that's dropped by 83%, although the margins have expanded on a Q-on-Q basis. But the more important news is that along with results, HEG has announced a split of its equity share, carrying a face value of rupees 10 into 5 shares, which will have a face value of 2 rupees each. And this is the first instance of the company on deciding a stock split. Earlier, HEG had carried out a buyback of shares in 2019. and but it has never issued a bonus as well. The record date for the stock split is yet to be announced. So these are some of the stocks that I'm keeping a keen eye out on. Let's welcome our guest on board now. I think we have Kiran Jani with us, Head of Technical Research at Janam Broking. Kiran, warm welcome. Thank you so much for taking the time out. It's been a fairly volatile week for the markets, and now we are right ahead of the truncated holiday. What is it that you expect on the benchmarks, the Nifty and the Nifty Bank?
Very good morning, everyone. So, looking at the daily chart pattern of Nifty and Bank Nifty, they both are into the lower time frame and daily chart. Both charts showing us that both index are trading into the falling channel. Number one. Number two, if we look at the Bank Nifty chart, Bank Nifty has already broken down its 20 and 50 days moving average. And whether Nifty is trading somewhere around its 50 days moving average support. Since last couple of weeks, we are seeing that Nifty was making higher lows on lower time frame. However, yesterday we have seen that Nifty has broken its 3 days higher lows pattern, and now it is trading at its fourth day consecutive low. Coming to the momentum indicator are also trading into the negative to neutral zone. And coming to the weekly expiries, the PCR ratios, they are all below 1. Now stocks, the index specific Nifty has a great resistance of 22,400 and 300. If market is not able to cross those resistance, then we can able to test its 50 days moving average, which is somewhere around 24,000. So there is a range of 24,000 to 24,300. Either side breakout and breakdown will decide the trend. And overall, our view is a little bit negative. So keep booking your profit or keep a strict stop loss of 24,000. If market sustain below 24,000, we can expect some the quick corrections on market also. Coming to the Bank Nifty made a bearish flag pattern, and yesterday we have seen breakdown from that pattern also. The 50,000 and 49,800 were the great support. Now yesterday Bank Nifty just closed near about 49,800. So today we have to see if market keeps sustaining above 49,800, then we can expect some kind of short covering which can help market to go somewhere around 50,000, 50,200, not beyond that. If market crosses 50,200, then we can expect some good amount of rally. Otherwise, sell on rise would be the strategy. Keep a strict stop loss of 50,200 for short sell, and as and when market breaks 49,800, we can expect some sharp corrections towards 49,200, 49,000, as 49,600 will be the 100 days moving average also. So today the range would be 49,600 to 50,200. Either side breakout breakdown will lead the trend, and 49,800 will be the make or break level. So overall, both the indices, our view is sell on rise.
Right. Good morning to you, Kiranji, and a very warm welcome. Tomorrow is a holiday, and we will be enjoying Independence Day as far as our normal lives are concerned. But how long do you think will this pain in HDFC Bank continue? It's now sort of creating a problem for at least the Bank Nifty. Yesterday's 750 point dip on the Bank Nifty had 650 coming in because of HDFC Bank.
So looking at Bank Nifty and HDFC, both comparative chart, as of now, HDFC Bank creating problem for Bank Nifty, that is sure. But if you remember last week when Nifty was trading into the downfalling channel, the HDFC Bank only holding Bank Nifty, and that's the reason Bank Nifty was keep sustaining 50,000 level. Now as HDFC Bank breaking down is 20 and 50 days moving average in yesterday's gap down, the Bank Nifty is also feeling some pressure. Now HDFC Bank has a multiple support of 1600. If market sustaining below 1600, then we can see some problem can be a severe. If market sustain below 1600 level, then we can expect price corrections towards 1560, 1550. So whoever is holding HDFC Bank, keep very strict stop loss of 1600 and wait for the dip somewhere around 1550, 1562 for fresh buy. So no recommendation for fresh buy at current market price. 1660 would be the strict stop loss for any long.
Okay, got it. So that's as
Fair
far
point.
as.
If you look at
yes, please, Shail, continue.
Yeah, Sakshi, just a line on HDFC Bank. Over the last 1 year, it's absolutely flat. So that's the pain point, ladies and gentlemen, that we are grappling with. Down 0.2%, and this is a time when the markets have accelerated dramatically. And here is a stock which is the heaviest weighted on the Nifty, and of course a third of Bank Nifty. which has done nothing. In fact, it's the source of all selling pressure that you see emanating from foreign institutional investors. A net number yesterday was down 2,000 crore rupees again. So this is the crux of the situation, where India's most fetid bank, the best balance sheet, everything is good fundamentally, but the stock refuses to move for some reason or the other, and is in fact creating a lot of problems for the broader market as well. Sakshi.
Absolutely. Apart from this, Kiran, I wanted to also ask you, of course, it will be a very volatile session again to begin with, but would you still have an opportunity to buy into some of the stocks? Have you identified any stocks?
Yes, definitely. So, when the index is on sell-on rise, however, we have seen that FMCG and pharma becoming a defensive sector whenever the market has such kind of a price corrections or such kind of an uncertainty is going on. So, Hindustan Unilever would be our preferred choice. The tailwind is there, as we discussed. Whenever the market crashes, the FMCG plays the defensive role. Number one. Number two, if you look at the Hindustan Unilever chart, the price pattern is remained under no return since last 2 years. Now the stock price has made a rounding bottom pattern on daily chart. On same chart, we can see the flag pattern is also going on. The stock price is trading above its all important moving average. Momentum indicator is also in bullish zone. So we are expecting Hindustan Unilever can give some fair good amount of upside. So for trading as an investment, definitely one can look into the Hindustan Unilever, keep long on at current market price. Keep strict stop loss of 27.10. This is for trading. Stop loss for investment, you can keep stop loss below 26,650. And for trading, the target somewhere around 2,800. But as an investment, we are looking some good amount of target. So HUL as a trader and as an investor looks very good at current market price. We are bidding heavily. So as a disclaimer point, we are already recommended to our client and our associate already having position in HUL. Now coming to the another stock, which is MCX. MCX, if you look at the daily price chart, the stock price is trading at the all-time high. The stock price has made a very good pattern on daily chart. It is a cup and handle pattern. Here also stock price is trading. It's all about important moving average. Momentum indicator is just taking or retest is bullish zone. So we are expecting MCX can give a good amount of rally from current market price. So 43.50 is the closing price. We are looking target of 4,400 with the stop loss of 43.10. So MCX and Hindustan Unilever both are our preferred pick.
Okay, a very good time to welcome our dear friend Mr. Gaurang Shah, Senior Vice President for Geojit Financial Services. He joins us from Mumbai. नमस्ते गौरांग जी, शुभ प्रभात। हमेशा की तरह आपका तहे दिल से स्वागत है। किस तरीके से आप इस समस्या को देख रहे हैं जो हमारे सामने बाजार जूझता हुआ दिख रहा है, हिंडनबर्ग क्राइसिस और उससे जुड़ी सारी समस्याएं जो धीरे धीरे अब बाजार में खुलती दिख रही हैं?
बहुत बहुत धन्यवाद शैल जी, आपका सभी को शुभ प्रभात और 77 साल आजादी के सबको मुबारक हमारे तरफ से। बहुत बहुत शुभकामनाएं सभी को हमारे तरफ से। मेरे ख्याल से मैं ये पिछले हफ्ते जब से ये जो भी कुछ आ रहा है, छप रहा है, हिडनबर्ग और सेबी के सबसे बड़े अध्यक्ष को लेकर के, आप मानेंगे नहीं, मैंने एक पन्ना तो क्या एक शब्द भी पढ़ा नहीं है। क्योंकि शैल जी, मुझे बेतुकी, बिना तर्क, बिना हाथ पैर वाली बातों पे ना तो मैं मेरा समय व्यर्थ करना चाहूंगा और ना ही मैं मेरी बुद्धिमत्ता का जो सम्मान है उसको असम्मानित करना चाहूंगा ये सब बातों को लेकर के। इतिहास गवाह है आपके और मेरे सामने, मैं ज्यादा गहराई में जाना नहीं चाहूंगा। और कहीं ना कहीं मुझे लग रहा है कि ये सूझबूझ वाली रणनीति है हमारे भारतवर्ष को और हमारे भारतवर्ष के शेयर बाजार को थोड़ा बहुत अपमानित करने के लिए। आप ये सोचिए शेयर जी, आप किस संस्था पर आप उंगली उठा रहे हैं और आपके पास तर्क क्या है? मुझे नहीं पता आपके पास, इफ यू हैव गॉट सम काइंड ऑफ proof or evidence which these jokers have given, then I would like to have a look at it, because I have not come across since last week and today any kind of material which can convince us to raise those kind of doubts or put that person in the witness box. So I will be least bothered about these kind of, sorry to use that word, Shelji, nonsense. And I would concentrate on the market, and I will use all opportunities on the downside to nibble into some good, strong fundamental stocks.
Very good morning to you. So good to see you in the tricolor, and you're looking fantastic in that Indian attire, and bringing that vibrancy on the screens. Thank you so much. And of course, like you pointed out on the Hindenburg research report, a lot of pushback has really being seen this time around, from all strata, that, an unregulated entity cannot just come and keep questioning all our regulated entities and corporates which are, governed by the highest governance standards in India. But I want to ask you, since you said that you will be looking at nibbling into some good opportunity stocks, would you also look at an opportunity within the Adani Group?
Well, so, I'm not saying that Adani Group companies, Sakshi, thank you so much, and morning to you as well. We don't have coverage on Adani Group of companies. The only company that we cover is, I think, Ambuja Cement, because of the certain ownership that they have. So that's the only stock we have in coverage. But we not having coverage doesn't mean that companies are not good, or they are very bad, or their financial is pathetic. We have to go by the regulation which has been set aside by the same institution on which the questions have been raised. So since the coverage is not there, I won't be able to give any buy, sell and hold on any Adani Group of companies. Yeah, but Ambuja Cement is something that we've been having coverage before this transformation took place in terms of ownership. And that's the only company that we have coverage and fundamental buy call from a long-term point of view. But I will again like to repeat, we having no coverage on Adani Group of companies doesn't mean that companies are not fundamentally sound.
Fair point. Gaurang, let's get to the crux of the market, which is this very, very sharp rallies that we are seeing in pharma stocks. They were just ignored for years together, and suddenly all of them have started to flourish. Record highs on many of them. Aurobindo, Glenmark, Lupin again has come back after a 7-year hiatus. Natco Pharma, look at how this counter is running up. Would you have a mid-cap favorite within the pharma space, and possibly a large cap one as well?
Oh, I have one too many, to be very honest with you, Shail. And this kind of uncertain times, I think people want to go and sit on that safety branch, take a flight to safety, and pharma and hospital, I beg your pardon, healthcare hospitals, diagnostics kind of companies come in the limelight. And not to forget, the earnings have also been supportive, whatever we've seen for this new financial year FY25 first quarter. So I would there are a couple of names, yeah, but if I have to pick and choose one from large cap, one from small cap, mid cap, then I think Zydus Life and maybe Cipla. These two would be my picks. We have almost more than half a dozen more companies in the pharma universe. And in the hospital stroke healthcare, there are three names: Apollo, Narayan Rudala and Fortis. If I have to pick one, I'll pick Apollo because it is the large cap in the sector and has got great plans in terms of expansion of number of beds that they have to service.
Okay. So that's as far as the pharma is concerned. I'd also like you to, also share with us, Gaurang, on stocks like Nykaa, and within the new age internet basket. Honasa was up yesterday. Today it's Nykaa that's reported strong set of numbers. Beyond Zomato, which we've discussed number of times, are there other newer new age stocks that are actually coming on the positive radar?
So Nike, I don't recollect, Sakshi, we have coverage, but yeah, Paytm is something that we have turned positive. Zomato is always on the preferred buy side, given the kind of massive turnaround in terms of earnings and the contribution from Blanket that we've seen. New age, if you will, Ola Electric, I know the stock has been a flyer over the last 2-3 days. I'm not saying buy today. I think let the stock settle down. The stock is up almost about 50-60% in the last three trading sessions. Given the floor of 76 and the closing yesterday, we let again a disclosure. We had given a subscribe to the IPO of Ola Electric, and I think tomorrow is the day when we'll see curtain raiser for a new electric motorcycle from Ola Electric, and I think that's something that one should look forward to. Only thing is, the management needs to do something serious given the loss on the balance sheet and the time frame to turn it around. I think they need to really put their brains to work.
Right. Let's get Kiranji into the conversation. Mr. Jani, a lot of activity happening on the pharma side. What are the two stocks that get your attention on strong medium to long term charts as far as outlook is concerned on the long side?
On pharma sector, Torrent Pharma looks very good at current market price. If you look at the daily price chart, the stock price is trading into the height of higher bottom pattern. Momentum indicator is also at a very fairly level, except other pharma stock price chart or the momentum indicator is trading into the overbought zone. However, the Torrent Pharma charts look very good. Yesterday's volume, if you look at the price volume is also there, and the volume is higher than the average 20 days volume. And the flag pattern is also getting breakout. So Torrent Pharma looks very good at current market price. Keep a strict stop loss of 3300 and you can go at current market price also. We are expecting the price target of somewhere around 3500 to 3600. So Torrent Pharma is one stock. Another, the diagnostic space which we are liking, it is tailwinds of pharma only. So VGR diagnostic. If you look at the VGR diagnostic price chart, the stock price is trading, he's made a rounding bottom pattern and it is a continuous pattern. The stock price on lower time frame, stock price made a double bottom pattern and it has given a breakout also. The volume and momentum indicator both are picking up at current market price. The stock price is trading at 830. You can go long at current market price, keep strict stop loss of 800 and we can expecting price target of 900 plus in very short time. So Torrent Pharma and VGR diagnostic both are our preferred pick.
Okay, ladies and gentlemen, we have the pre-open trades upon us. It's a nice 173 point gap up. Let us see whether this one holds within the pre-open only or not, and then we will proceed to 9:15 a.m. Remember, it's the weekly expiry of the Nifty and the Bank Nifty today. Okay, the first stock to check, HDFC Bank, back foot again, 5 rupees lower, 1598. How about Infosys, 20 rupees higher, 1818, and Reliance, okay, 24 rupees down, 2904. This is not looking good, at least for the Nifty to begin with. Which are the gainers? Apart from Infosys, you have Tata Motors and Bajaj Finance, 1.5% and 1% up each. Okay, defensive is coming back. ITC is 0.5% higher, 492. So this is how the markets have structured themselves as far as the opening quotes are concerned. Let's look at what are the other changes happening in terms of the earnings boy. Apollo Hospitals, 6,700 rupees, 1.7% higher. Remember, first quarter PAT rose 83%, and amongst the favorites that the pharma space throws up for Gaurang, Apollo is one of them. What's happening for Hero Motors? This is also something that needs to be looked. 1% higher, 5290. Nothing much here. Let's shift focus to F&O stocks. Look at top gainers and top losers. Okay, IRCTC, strong set of numbers. It just slipped my mind. 10% higher, 1010. So it's 10 10 10. Wow, this is a triple Nelson Sakshi for you. Aarti Industries, after 2 days of drubbing, is now 2% higher, 635. Is that a dead cat bounce? Only time will tell. Hindalco, strong set of numbers coming in, 2% higher, 633. Okay, what is the top loser here? Okay, Piramal Enterprises, 5% lower. This will readjust. Actually 6.6% lower, 920. Bharat Forge, GMR Infra, nothing much to talk about. A very quick look at NSE 500 and then we'll get to Gaurang. Okay, most active. Okay, let's look at top gainers here. SGVN, very strong set of numbers, 9% higher, 149. Nykaa, 3.6% higher, 194. Again, all numbers led. What else is moving? Inox Wind, no stopping it, 3.8% higher, 224. Vedanta, this will be getting the OFS from Hindustan Zinc. The counter is gaining strength, 2.7% higher, 433. Hudco, 2.5% higher, 295. So it's pretty okayish, 64 points higher on the Nifty, 24,204. Let's get Gaurang back into the conversation and look at the wind energy space. Strong moves coming in on Inox Wind, Inox Green, Suzlon. These, of course, Gaurang, are very high beta trader favorite stocks as well. What's the fundamental tailwind behind energy you feel?
Well, Shall, I think it's purely the capacity that the government has lined up in terms of the next 5 years. And our sense is that, large part of this new power generation capacity that is going to come up is going to be solar and wind. And that is where exactly you are seeing the kind of interest coming in. And not to forget, reducing carbon footprint is on the priority list as far as the government is concerned. So the one company that we have turned positive over the last maybe about couple of weeks is Suzlon. This stock also has rallied quite a bit, Shell. So one needs to be a little bit cautious in terms of short to medium term. Again, I'm not capable of advising short to medium, but long term, I think this is one stock. And post the earnings, the management has given some strong commentary in terms of turnaround in business that they are witnessing. So this is one particular stock that I would talk about as far as the wind generation companies, wind power generation companies are concerned.
Okay. Kiran, would you also look at Suzlon or Inox Wind in this continued bout of momentum, or is it too much done already and you'd stay away?
So looking at its historical chart, definitely still a lot of way to go. But currently, whatever the movement has been done from Suzlon chart, if you look at if you check out June 2023 to till today, it's almost in 14 months. The stock price from 8 rupees to 80 rupees. So it has definitely given a very good amount of rally. On monthly chart, the momentum indicator is trading into the overbought zone. Definitely daily and weekly momentum indicator is also on overbought zone. However, on monthly price chart, stock price has made a flag and pole pattern, which breakout came at 50 rupees level. And looking at that pattern, we can expect still 95 rupees target. But at current market price, risk reward ratio is not favorable. So if anyone is holding this stock, definitely they can hold this stock. But for fresh buying, wait for some time, let it to consolidate in some time. Or any price corrections towards 60 rupees, 70 rupees, then only one can add. Otherwise, at current market price, fresh entry is not possible because of the risk reward ratio. So, Suzlon, we are not recommending to buy at current market price, but whoever is holding, they can hold with a stop loss of 60 or maybe 55 rupees.
Gaurang, I'd like to get your view into Ashok Leyland. This has been one stock that you have recommended in close conjunction with Tata Motors. And if you look at it in this month itself, up 11%. The management came post earnings and said that there are three unlisted Hinduja Group companies within Ashok Leyland possibly headed for a listing. So that's a big plus for long-term shareholders. How do you evaluate Ashok Leyland at current levels, almost near highs, and the top gainer in the auto space in August?
One of the most important triggers for Ashok Leyland, rather than this listing, is the commencement of its new manufacturing capacity, I believe, in Uttar Pradesh. And the switch mobility business that they have kicked off has gone down pretty well. They have received some very decent orders, and with this new capacity coming up, commercial capacity coming up, I think it's going to add to the positivity. I was reading, I think it was in last month, in the month of July, they have managed to secure some large orders for buses as far as the state transport utility is concerned. I believe it was MSRTC, Maharashtra State Road Transport Authority, which had given a big order, and from other state transportation authorities as well. And I think replacement demand is going to have a huge tailwind positive in terms of scrappage policy. We have revised, I beg your pardon, the targets for Ashok Leyland. Earlier it was at about 225, 230. I believe now we have re-rated it to 285 to 300, if I'm not mistaken. But yeah, we do have fundamental coverage on Ashok Leyland.
Okay. Right. Now, Gaurang, apart from the auto space, are you also looking at the auto ancillary stocks keenly even now? Say Samvardhan Motherson came out with the earnings. Brokerage houses have raised the target prices for Samvardhan, Morgan Stanley especially with a 198 target on inline earnings, and the ramp up of the non-auto business that could provide some certain support from here on as well. We've seen a good rally, a consolidation. What's next for stocks like Samvardhan?
So, Sakshi, I think we can't separate the two, or rather two, three. If auto is going to do well, Sakshi, according to my understanding, auto ancillary, OEM segment companies, tire manufacturing companies, and battery manufacturing companies. All these go hand in hand. You can't separate them and look at it. But you need to be a little bit more conscious about picking up stocks. I'm not saying that some will underperform, but some will tend to outperform given the kind of component manufacturing capabilities that they have, which have now become very vital after the policy changes by the Transport Authority of India. So my sense is that names like Uno Minda, names like CIE Automotive, Amara Raja Mobility, Exide Industries, Bosch, Apollo Tires, JK Tires. These are some of the names on which we have fundamental coverage.
Okay, ladies and gentlemen, the Nifty settled 45 points higher. It's the weekly expiry for the Nifty today, despite it being Wednesday. Tomorrow is a holiday. Equally, the Bank Nifty is trying to start 55 points higher. Let's hope both indices close flat and we end this siapa that is happening this week. Now, coming back to the markets, we'll get Kiranji into the conversation and talk about some winners for the August expiry that are upon us. Kiranji, you've already highlighted MCX as one of your picks for today, as also for the medium term. I just wanted to understand, how are you seeing ONGC? 8.6% higher, two good tailwinds coming in. The APM for gas has been raised to 20% instead of 10, and of course we see these crude oil prices spurting in the Middle East. This might be short-lived. Nevertheless, a strong earnings show, good government backing, and crude on the boil. 334 for you, and the top gainer in the oil and gas space for August. What are the charts of ONGC telling you in the medium term, say 6 months?
So looking at monthly chart, stock price has already given a breakout from flag and fold number one. The last month performance was spectacular. If you look at from 270 to 333.20 was the performance has been delivered by ONGC. Now at current market price, definitely after the good amount of rally, stock price into the consolidation zone on lower time frame like daily and weekly. On daily price chart, we are seeing from July month stock price is not able to cross 350, 340 level, and at lower bottom we have seen that prices has tested its 20 days moving average for twicely. Now during this pattern or during this consolidation, stock price has made double bottom on very much lower time frame. So if price is sustained above 340, it will be considered as a breakout from the double bottom pattern. Momentum indicator from daily, weekly, and monthly all time frame trading into the bullish zone. So definitely one can look into this. So our take will be the conditional bet. Buy above 340 level. If price is sustained above 340 level, then we can expect price target of 380, 400 in coming 3 to 6 months, and keep a very strict stop loss of 320. So conditional buy above 340, stop loss of 320 for the target of 400.
Got it. Gaurang, the other space that warrants your attention is the insurance space. Both the public as well as the private life insurers that have been consistently on a buying spree. What would you be really looking at within this space? How should an average retail investor approach the insurance basket?
One of the most important on the fundamental side to look at, Sakshi, is the consistency in terms of the new insurance premium business that they have reported, whether the consistency is there for the quarters to come by. Because that will give you a decisive sense of growth that is coming back. And I'm quite sure it is going to stay at a decent level. It's not going to disappoint given the kind of change in approach for looking at insurance as a product which will safeguard the future of your family members in case if something has to happen to you. And that is, I'm speaking this from the ground level interaction that I've had with a lot of individuals. Time horizon for investment in life insurance related companies comparatively should be a little bit longish because it's going to take time for this conversion to happen. LIC, SBI Life, ICICI Prudential Life, and HDFC Life. These are the four prominent large players on whom we have a fundamental buy call.
Right. And some of them, if not all, have been long-term disappointments as far as wealth creation is concerned. Be that as it may, markets have this habit of not sort of working to timelines that suit us and then surprising us on the top side over the longer term. Gaurang, it just slipped my mind very quickly. If you can just tell us two stocks that you found likely to do better post the huge set of earnings that have come in from the first quarter. Just two names.
Well, Shail, then NTPC will be first one. We were talking about power, wind power, and I think NTPC, given the kind of huge setup of power producing capacity it already has, and the likely addition of adding more. So power, NTPC would be the first one. And you'll be surprised, I'm going to choose one more company, which is a PSU company, that is BEL. Undoubtedly, defense is something that is very close to my heart, Shail. You know about this. So BEL would be the second one. So NTPC and BEL, I think I'll pick these two.
Okay, the markets are open, Gaurang. I'll just request you to tighten your seat belts. We'll come to you for Cochin. Sakshi and I are really surprised that for the first time, I think in many months, we haven't discussed Cochin with you, but we are coming to it. Markets are open, ladies and gentlemen. It's flat for the Nifty, 24,133, and equally flat for the Bank Nifty on its weekly expiry day, down 19. The IT index is 1/3% higher, leading the charge on the green side. Flat opening on the NSE 500 as well. Okay, now let's look at the index heavyweights. So we'll start with HDFC Bank. This one is a pain point, but opening 6 rupees higher at 1608.90. Infosys in the green, 7.65 higher, 1805. Reliance flat as flat can be, 6 rupees 40 lower, 2921.55. Okay, taking it away, Tata Motors 1% higher, 11.5, 1065. What is in pain? Axis 0.5% lower, Bajaj Finance flat, and that's how the top index heavyweights are stacking up. Even Stevens, nothing much to report about. A very quick look at Adani. Okay, mildly in the red and nothing much to be worried about. Ambuja Cement in the green, NDTV in the green, Adani Ports and Adani Enterprises down about 1% each. Okay, now we'll shift focus to the top gainers in the NSE 500. Earnings. SGVN 7% higher, 147.20. Nykaa 2% higher, 191. Motherson Sumi, earnings came in during market hours yesterday. The reaction is positive today, 2.6% higher, 185. The management will be joining us. No stopping Inox Wind, 1.2% higher, 218. NBCC also strong show, 2.9% higher, 178. So this is looking good. Let's look at the most active counters with gainers. Okay, the charge is led by TCS. This is interesting. In the green, 4,202. What else is in the green? Apollo Hospitals, 0.5% higher, 66,115. Hero Motors down 2%. 5134. This is how the markets have opened, ladies and gentlemen, on this twin weekly expiry day. Let's look at the broader markets before we get to Kiranji. Okay, 1062 shares in the green, 961 in the red. That's almost 1:1. So flat market that is expected. We track 19 indices for you. Sakshi, 10 are in the red and 9 are in the green. The top performing index is the Nifty PSU Bank, a third of percent higher, and the worst performing index is Nifty Realty, 0.5% lower. So it's just nothing happening in the markets. Kiranji, anything that catches your fancy in the first 1 or 2 minutes of trade?
So we are looking some steel counter or maybe the metal counter looking very good at current market price. Even the day before yesterday, we have seen that metal counter has given a fair amount of uptick. Yesterday there was some downtick was there, but at current market price, you look at JSW Steel or maybe the Tata Steel. They both are looking very good. Coming to the JSW Steel, the open low is same. That is a first screen reading which looks promising. Another thing is that since last 5 years, stock were into the high top high bottom pattern, and today the stock price is exactly trading near about the yesterday low. So there are chances if a market recover or it gives signs of recover, the steel counter or maybe the metal counter would be the first counter to move above. So JSW Steel at current market price, anyone can go long, keep strict stop loss of 900, and we can expect price target of 925, 930 in today's session. So JSW Steel looks, or maybe the metal sector or the whole sector you can look.
Okay, PSU banks, those are the ones that are actually rallying. It's the top moving sectoral index, about 0.4% higher in trade right now. SBI definitely leading the show, 1% higher in trade. You have Bank of Baroda, Canara Bank, Indian Bank, Bank of Maharashtra, Punjab and Sindh Bank also picking up pace. Kiran, quickly, if you could tell us, is there a trade within the PSU banks that one could look at?
So PSU Bank as of now looks trading into the green tick, but look at the SBI. SBI has given a breakdown from head and shoulder pattern somewhere around 840, and looking at that head and shoulder pattern, there are target of 800. So now stock price is trading somewhere around 800, but since last 1 week, stock price is also trading below its 100 days moving average. So at current market price, no doubt the SBI is giving bounce, but if it is not able to cross 820 level, then we can expect sell on rise kind of a strategy should apply on State Bank. So if anyone is holding this stock, they can hold with the strict stop loss of 790 or maybe 795. If stock price is not able to cross 820, then we can expect some price corrections also. So as of now, we are just waiting, watch for the Bank Nifty or the PSU Bank or even a private bank. We are not recommending any buy at current market price.
Okay, got it. Well, Hindalco is up by about 1.5%. Yes, Shail.
Yes, actually, continue, please. Continue.
Hindalco is the one that's been moving sharply higher in trade. Remember, after earnings and brokerage houses upgrades that are coming in for Hindalco, Jefferies has a 800 target price for this one with a buy rating, and they do believe that Novelis is now benefiting from improved beverage demand, which can demand can come in, and therefore you actually see the second half that could be looking promising is what Jefferies has pointed out. 1.7% higher now. It's the top moving Nifty stock at this point in time. And it's the auto stocks that are now picking up pace. Tata Motors was highlighted by Shail already. M&M is now 1% higher in trade. We have a whole host of other stocks. In fact, 0.5% uptick can be seen on the auto index clearly. Samvardhan is the top mover in the F&O space, about 3.5% higher in trade. You also have Bajaj Auto, Tata Motors, Balkrishna Industries is also picking up pace right now. Gaurang, coming back to you on the auto story, your pecking order in terms of the auto stocks, what would that be amongst the 4 and the 2-wheelers?
I think you also learned a knack of putting a gun on my temple like Shail does sometimes, Sakshi. So, I mean, bias would definitely be there with maybe likes of Tata Motors. and this bias has been there for a pretty long period of time. Uh, so I remain extremely positive on Tata Motors. M&M Maruti, that's going to be the order of preference. Bajaj Auto, TVS Motors, Hero MotoCorp, Eicher Motors, that would be the two-wheeler preference, two-wheeler, three-wheeler preference, if you will. And the stock that we just discussed a while back with Shell, Ashok Leyland, I think this covers the entire universe, barring, of course, Escort Kubota, on which we possibly have a sell call or book profits.
Okay, it's almost 9:23, ladies and gentlemen. Let's dig a little deeper. Where is a strong move coming in? It's in Markson's Pharma, 11% higher. We need to look at this one, 208. Needless to say, this is a record high. A very strong move is coming into Policy Bazaar. It's changed a digit, moving towards a record high, 1537. Post earnings, GNFC is buzzing around its 200-day DMA, up 3% at 685, and there is a record high on Oil India, Ajanta Pharma, and V-Guard. V-Guard is up 9% at 570. Kiranji, coming to you, Policy Bazaar and GNFC, what are the charts telling you?
So looking at the Policy Bazaar, definitely the stock price were into the consolidation phase. July month stock price has made a high of 1540 level, and from that day stock price never able to cross the 1540, 1530 level, and it was into the consolidation zone. However, in this consolidation zone, stock price never breached its 20 days or even a 50 days moving average. So very strong consolidation has been completed, looks like today, and the momentum indicator is also getting entry into the bullish zone. So at current market price, anyone can go long on Policy Bazaar. Keep strict stop loss of 1450, and looking at this consolidation and looking at overall chart pattern, we can expect price target of 1800 in short time. So definitely Policy Bazaar at a very good pick at current market price. And another stock is GNFC, right?
Yes.
Okay, coming to the GNFC, stock price is trading below its all important moving average. However, on daily chart price, the stock price has a very good support of rising trend line. So if anyone is holding this particular stock, they can keep holding GNFC with the strict stop loss of 640. If stock price is not able to break down 640, then we can expect some price target to achieve 730, 740. But for the fresh buying, we are just wait and watch for crossing 690 level. So conditional buy, if 690 cross, the fresh bet can be taken, or at current market price, anyone holding, keep holding with the stop loss of 640.
Okay, HDFC, my apologies, Bank India, Nifty Bank, ladies and gentlemen, is down 100 points. While this is not a great number to look at, but the problem is that it is now below its 100-day moving average, and a close below that will open up 49,000 for you. We are at about 49,737. Maybe these are early issues as far as the weekly expiry is concerned, but do keep an eye out on this one. In terms of contributors to Nifty's 7 rupee uptick, M&M top performer, 1.2% higher, contributing 8 points. Infosys and HDFC Bank roughly 7 points each, SBI 6 points, and Bharti Airtel 6 points. Goran, coming to you, this purchase of 24% stake in British Telecom by Bharti Airtel, how do you see it? Traditionally, the experience that Indian markets have had with these kind of top level takeovers, where a lot of money is spent buying an established market brand in a stagnant market, doesn't bode well for shareholders in India. We've seen Tata Steel failing miserably with Chorus. It is with great difficulty that Tata Motors turned around JNR, and now you have Bharti Airtel buying into British Telecom. What's your gut feel here?
So I was reading a report yesterday where the management said that there's not going to be any close interlink of this particular acquisition with Bharti Airtel. I stand to be corrected if I read it right, Shell. And that Bharti is going to be on its own path of growth and success. This particular acquisition may turn a little bit more creative as we go into the future. Maybe possibly near term, there might be some kind of concerns on the street. But what I read yesterday was that it's going to be an independent thing, and Bharti is not going to get any kind of aftershocks, if you will, of this particular acquisition.
Okay. IT stocks taking it away 0.7% higher. HCL Tech Mahindra are the top movers within the Nifty, within the IT pack, and along with these stocks we also have Infosys, Wipro, TCS, LTI, Persistent. These are the stocks that are rallying away. Let's get Kiran into the conversation. Kiran, IT stocks for you, can this momentum sustain? Should one purchase this kind of a momentum?
So looking at overall IT space, the entire IT space has given a breakout recently. If we discuss first IT index, looking at current market price, the IT index was into the falling channel, but today we are seeing since last 6 days of high is taking off by IT index at current market price 39,400. If prices keep sustaining here, we can expect some good amount of rally on IT space. Now within the IT space, definitely the large cap IT would be at preferred. So Infosys looks very good. Reason being that it was trading below the 20 days moving average. Now today it is crossing 20 days moving average, and also stock price is crossing its last 6-7 days high also. So 1810 is the current market price. Anyone can go long, keep strict stop loss below 1800, and we can expect price target of 1840, 1830 in upcoming time. So Infosys is our preferred pick at current market price.
9:29, ladies and gentlemen. The first 14-15 minutes of trade is upon us. Flat as flat can be as far as the Nifty is concerned. Bank Nifty is down 125. The star of the day seems to be Nifty IT index, now up about 237 points, sixth of a percent higher. And what's sort of pulling that in the F&O markets? Let's look at the top gainers. We've discussed GNFC, 3.1% higher. This is a bounce from 200-day DMA. Motherson Sumi, 3% higher. Yesterday's earnings were stunning, a 65% rise in first quarter profit to 994 crores, as also 44% rise in operating profit to 2,785 crores. Idea Cellular in the green, 1.7% higher. I think there is a brokerage report, Sakshi, which has given a price target of 20 rupees on Idea Cellular. Could you please check? I'll just come to you. And of course, you have the entire tech space today helping the Nifty on maintaining its sanity on the weekly expiry day. HCL Tech 1.3% higher. Tech Mahindra is buzzing a percent higher. You have Tech Mahindra trading somewhere like 15.19. Emphasis and Infosys TCS up less than a percent each, but all of them showing a strong traction in terms of open interest. Kiranji, coming to you, 1.3% higher on HCL Technologies, coupled by a 1.1% rise in open interest. How do you see the charts, sir?
Of TCS or Infosys? HCL Technology.
HCL Tech, sir.
Yeah. So HCL Technology, as you mentioned, that
yes.
1% open interest is also getting momentum. The price is also getting momentum. So it's a clear-cut long build-up. Look at the daily price chart. Stock price is forming a cup and handle pattern. So definitely one can go long at current market price, but it will be a investment kind of a theory rather than the trading point of view. However, the open interest and the price action is showing us that for the trading point of view also HCL looks very good. So anyone can go long at current market price. For trading point of view, you can keep a stop loss of 1590. If 1590 is not broken down, then we can expect price target of 1650, 1660 in short time. However, we would like to go with the investment theory. Reason being, the big cup and handle pattern is getting breakout. So at current market price, anyone can go long on HCL technology. Keeps fixed stop loss of 1550, 1540, whatever as per your risk appetite. And you can expect price target of 1800, 1900 in the upcoming time. So if you are okay to give 6 to 8 months on HCL technology, the price target is very good. You can go as an investment.
Fair point. It's a sea of red, Sakshi. We started with 8 indices in the green and 10 in the red. Well, now just 2 indices are in the green. The auto index flat, mild green tick, and the Nifty IT index a fourth of a percent higher. Advanced decline has deteriorated very sharply. Only 600 stocks are in the green compared with 1550 that are in the red. For the widest tracked index, Nifty 500, again in the red, a third of a percent lower. Just 107 stocks are in the green compared with almost 395 that are in the red. Heavy selling pressure now on stocks such as Hindustan Aeronautics, 2% lower, 4600. Hero Motors, 3.7% lower, 5056. Muthoot Finance, 1812, 2.5% lower. And of course, Adani Ports, 1466, 1.25% lower. Is this something to do with the Middle East? Is this something to do with how crude oil prices are spiking up in the middle, or is it something to do with the broader change in the geopolitical situation? Joining us today on the show is a special guest, Mr. Narendra Taneja. Not only is he an energy expert, but he holds a very strong grasp on how geopolitical situations are changing in the Middle East and of course in the US. Namaste Narendra ji, a very warm welcome to you, sir. We'll start with the turmoil that is being faced by a lot of listed Indian corporates in the Middle East. A lot of costs have gone up, especially on the container side. Inventories are building up, and now we have this overhang of a possible escalation in the crisis between Israel and Iran. How do you see the Middle East as of now, sir?
Well, Namaskar, good morning. As you described, when you look at the landscape, the geopolitical landscape of the Middle East in particular, but globally as a whole, which has a huge impact on the price of oil, price of natural gas, container shipping costs, etc., as you know. So, broadly speaking, on the global economy, today the situation is that, oil markets in particular, but markets in general, are very worried about three things. Number one is, of course, the geopolitical situation in the Middle East. We don't know how Iran is going to respond because Iran has yet to respond to what Israel did, in terms of that high-profile killing in Tehran. Secondly, we know that what's going on between Hezbollah in Lebanon and Israel. And at the same time, we know that if Iran responds when it does, which is kind of can happen anytime, any day, actually even today. So then how Iran is going to respond to it and what impact that would have on the global oil supplies for that Mr. Global, transportation channel, the maritime channels, including Suez Canal, Mediterranean, Red Sea, and Arabian Sea, etc. So that's all kind of, in the domain of if, and that's why you see the worry in terms of oil prices in particular. The second aspect is, of course, now there's that reports that American economy is probably slowly going in the direction of a recession, not a deep recession, shallow recession, but that's worrying oil markets in particular tremendously. And third aspect is, of course, China. China is the second largest, importer of oil, is a huge market. And there, the economy overall, the market senses of economy is not doing very well. Diesel consumption has gone down, oil consumption has all gone down, their exports have gone down, and China is keeping up a brave face that everything is fine, but market is more or less convinced that China's economy is in deep trouble. So all these three aspects, and plus, of course, the elections in America, everybody knows, whenever you have elections in America, American government makes sure that oil prices are kept at a low level, because higher oil prices for ordinary consumer America means that they will always vote against the whosoever is in the White House. So it's a very complex situation, and that's reflecting in terms of the crude oil prices. So right now, the market focus is entirely on the Middle East. How Iran is going to respond, how deep is going to be the response, and how Israel then is going to kind of, return that. And at the same time, we know that America has sent its naval force in the Mediterranean. So would America get involved? Would Saudi Arabia, etc., keep quiet? Or would the effort to bring all the parties on the table, particularly Hamas on Israel, would that succeed? The reports are that Israel is not in favor of any kind of settlement with Hamas. If that is the case, because that's what the US wants, that's many Western powers want, then what is going to be the final outcome? So all this is playing in terms of oil prices. But the biggest worry is the demand for oil is not going up. Demand is very weak. Supply side, there are no constraints as we speak today in terms of supply channels and supply, routes, etc. So supply is sufficient, demand is not growing. So oil prices actually should have gone down to $70 per barrel, but they're not, thanks to the geopolitical situation. Because when it comes to oil prices, oil is 90% politics even today, despite renewables, solar, and so on and so forth. So we all got to wait and see. But the situation right now very tense in the Middle East and therefore in the global oil markets.
Well explained, Mr. Taneja. Very good morning to you, Sakshi, this side. Looking at all these scenarios, on the one hand, you're saying the demand is not going up. Second side, supply constraints are not there. And the third side, geopolitics. Looking at that, we're at $81 per barrel. Where do you see the crude oil prices headed now? What could be the peak in case geopolitics, political concerns escalate from here? What could be the peak that we can expect?
Well, interesting question. To be very honest with you, nobody knows about what's going to happen to oil prices even tomorrow. If you go by the history of the last 100 years, I mean, nobody has been able to predict it accurately, but let me try. My own sense is that when you look at the global landscape, I think, because there is sufficient supply, and right now there is no supply disruption. Supply is kind of, is going smoothly. But as I said, the demand is a major factor in geopolitics, of course, sitting very hugely large on the landscape. So therefore, my sense is that oil prices probably are going to go, sometime it will go up to $85 per barrel, may even touch $90 per barrel, but then will drop back to $75 per barrel. So we should be mentally prepared that the band is going to be like $75 per barrel to $90 per barrel, thanks to the geopolitical situation, thanks to the demand and all that. And we all know that OPEC is kind of getting restless, and OPEC wants to intervene. And how do they intervene? The only weapon they have in their hand is to cut production, which they might do. Because if demand doesn't go up and the supply constraints are what they are, if there are any, then OPEC will intervene and they will announce production cut, and then the price will go up. It's important that in OPEC is all mostly about Saudi Arabia. In Saudi Arabia, the kind of modernization plans they have launched, industrialization plans they have launched, post-oil economy work that's going on there, they need oil price at $90 per barrel. The question being asked by India and China, big consumers, that why should we pay for it? Why should we subsidize your modernization plan? So we will go by market fundamentals, but that's not how it works in the oil sector. So my own sense is that anything between $75 to $90. Don't celebrate if it drops to 75 or even 72. But don't panic if oil prices go to $88 per barrel, unless, of course, there is a major geopolitical trigger in the Middle East. Ukraine is settled. We have no America elections are there. Biden is still in power. He will not oil prices to go beyond the roof. He will not allow that. America is still kind of has that kind of power. But at the same time, I think it's OPEC now, which is getting restless, very worried, and OPEC might intervene anytime. And if they announce production cut, the oil prices will start moving northwards once again. So it's just like politics. Oil prices game, the entire game is like watching a very exciting, interesting, soap opera. It's like, the OTT kind of thing. So that's the situation like. But as I said, $75 to $90, that's going to be the range. Unless, of course, there is some major military or, geopolitical upheaval as a new one in the Middle East. If that doesn't happen, 75 to 90, that's the band.
Okay. Narendra ji, as you mentioned, a soap opera, I am reminded of a very well-known resident of Old Delhi called Mirza Ghalib. And he once said, "Hota hai sabe roz tamasha mere aage." I am sure that explains the global oil market in one line totality. Let's look at how overtly this toolkit gang is now harming Indian interests. Earlier, this was, hidden, but now you see, maybe some political parties aligning to this narrative that everything and anything that is happening in India is incorrect. Of course, this comes at a time when the central ruling party is no longer commanding a majority in parliament. How do you see the Indian political landscape shaping up?
Well, interesting question. Oil is 90% politics, both global and domestic. Any country, go to Russia, go to the US, go to even Saudi Arabia, India is no exception. So politically, what's happening that, India is rising, but at the same time, everybody, many countries, Western countries in particular, they want India to rise because growing economy is good news for them. But we also saw what happens in Bangladesh. India has a Bangladesh policy, which was very independent, very robust, was doing very well. But they were big Western powers. They were unhappy with it. They intervened to stop India. That's the allegation. Now, the question is that if you're rising and you kind of rise to become a power in your own right, there are many countries that are going to stop you. The same is happening in the domestic politics. When you look at the domestic landscape, I mean, political parties in the opposition, for that matter, other political, they are not really bothered about it. That what is good for India? Do they really look at economy, look at global narratives which are being built, or the leaks on the kind of things they do care about? No. They just care that, look, hey, here, there is a report, it's going to be an issue. We can take it to parliament, ask for JPC, take it to people, turn it into a major political hot potato, or at least a kind of campaign. And if it works for them, it works for them. It goes to disadvantage of India, who cares? That's how politics works. In most democracies, look what's happening in the US. Do they have big picture? Do many of these people in democracies in western part of the world or in eastern part of the world care about the interest of the country or the ordinary people or the ordinary consumer? Simple answer is no. They don't. They don't see beyond what is good for them. They're looking for opportunities which they can convert into big political issues on the ground for the ordinary people because they don't understand the complexities. And if it brings political dividends to them in terms of election here, election there, or the vote share and all that, they're happy with it. If in the process, you as a country are the loser, who cares? So that's how it works, unfortunately. I mean, as part of my work, I interact with all of them, all sides, all that. And I know how, for instance, which country, name any big economy like India, one of the top 5 economies in the world today, where, for instance, you offer electricity, which is so complex, so expensive to produce, for free. Look what's happening in Punjab, what's happening in Delhi. For free, electricity free, imagine. And the same goes for a political party in Uttar Pradesh recently offered free 5 liters of petrol to everybody. Imagine something that you import, 86% of oil that you can import. So in India, we have gone to that extent where we actually are ready to play any kind of politics. We don't care about the national interest. We don't care about the future of the country. We don't care about, for instance, even the interests of the ordinary people, the very same people you are supposed to work for. So when it comes to politics, all people see across the world, in democracy in particular, their own, short interest. Everything is just, so nobody really cares about the countries and national. These are hard words, but I'm just talking of the hard reality because your viewers are mostly economic viewers. They understand business. So we kind of, need to understand. That's how it unfortunately works. And by the way, globally, look what's happening in the US.
Mr. Taneja, another thing that I want to ask you is that at what level does the crude price really start to get tricky for the Indian markets and the economy? Till when are we looking at it comfortably? But from when does it start becoming, concern?
Well, you see, when you look at the broad economics of India and balance of payment and, trade deficit, affordability in terms of ordinary consumers, let's not forget 70% Indians still live below energy poverty line, 70%. It's a large number. And I'm talking of India. Globally speaking, there are about 3.6 billion energy poor in the world. And they are the one who consume oil, gas, everything, electricity and all that. So in India, I think thanks to our economy and the quality of economy as a whole, I think if prices are in the region of $80 per barrel, That's average. $80 per barrel, I think we can deal with it. We as an economy can deal with it. But if it goes beyond 80, then I think, it starts pinching us, and pinching starts very hard. If it stays at $85 per barrel, it's very bad news for us. Now look at the other side, economy. Those countries which are producing oil in deep water, ultra deep water, where the cost of production is very high. When you go in the sea, deep water, it's cost of production, like in the Bay of Bengal, we are doing it in India. In shallow water, you are doing off Bombay. That's not so expensive, but deep water, very, very expensive. Exploration deep water, very expensive. Cost of one well can be like $100 per barrel, and the well may turn out to be just dry, no oil. So that's the kind of economics of oil in particular. The gas is the same story. But countries like Saudi Arabia, their cost of production is about, less than $50 per barrel. In some cases, about $35 per barrel. In Russia, its average is about $40 per barrel. I mean, they may dispute it, but I'm just sharing with you the number that I have got. So overall speaking, if oil prices are in the region of 80, it's a win-win for both big, large importers, consumers like India, China, and even Japan and the US. And at the same time, when it comes to big export like Saudi Arabia or other countries. So $80 per barrel is a kind of, price which works for the whole world, for global economy, for big exporters, and for the big importer. But anything that goes beyond it is a bad news. It may help Saudi Arabia in terms of modernizing its economy, but it doesn't work for India in particular. It doesn't work for China, by the way. It certainly doesn't work for the United States. And so therefore, $80 is something is working for us so far. It's hard. We are paying a heavy price. It's a huge cost for the ordinary, consumer, especially for those below energy poverty line. But as I said, we can manage it. It has a political cost, and because there are high taxes in India and so on and so forth. But I think it works. But $80 is something that works for India and globally also.
Okay. So $80, ladies and gentlemen, is ephemerally the line on sand as far as oil prices are concerned. Beyond that, it's difficult for consumers such as us, and below that, it's difficult for producers such as the OPEC. Mr. Taneja, you have more than a deep peek inside the thinking of the present government, and that brings to an interesting question, which is the energy PSUs. They have been, how should I say, used as vehicles for sort of, let me euphemistically put it, help the nation sort of regulate its oil bill and keep consumers, how should I say, not exactly unhappy but not happy either. There is this theme running in the market that the next space for a very sharp appreciation in capital over the next 2 or 3 years is the energy listed space in the PSU segment. What do you think are the 2 or 3 imperatives that the government of India wants to do for companies such as ONGC, the oil marketing companies, and of course the entire power sector and the natural gas space, all PSUs?
Well, that's a very interesting question. You see, when you look at, for instance, India's energy security, we look at the large economies of the world, like 5 or 6, 7 large economy. We are the one, not China. China is kind of secure, but we are very vulnerable because we import, 86% our requirement of oil, 54% of, requirement of our natural gas. Even in solar, 80% equipment we use panels and cells and all that we import. So in terms of energy security, we are extremely vulnerable. So what do? So my own sense is that, when it comes to companies that produce oil, that's the upstream company, ONGC, you have no option but to strengthen it. When it comes to natural gas and all that, you have no option but to strengthen GAIL, whatever you need to do for that. But when it comes to downstream, that's an area where I think the government should be a little bit more kind of dynamic and alert. Because we have several companies in the downstream sector, led by Indian Oil, we have Bharat Petroleum, we have private sector companies, we have Hindustan Petroleum, and we have some other small players as well. Now, I think that's the area where we can start. When you look at India's top energy companies, oil companies in particular, majority of our companies, most of our companies are not future ready. Are they ready for future? Let's say 5 years down the line, 10 years down the line, 15 years down the line, in terms of modernization, quality of governance, in terms of the kind of role hydrogen, renewables, nuclear are going to play? Answer is no, they're not. By now, they should have all diversified, for instance, ONGC, Indian Oil into nuclear in a big way, because nuclear is future, everybody knows it. Now, in such a sense, for instance, what my sense is that probably BPCL and HPCL, these are the two companies that the government to focus on. And there is a thinking in that direction. We all know that. That what do we do with these two companies? Why should government be, for instance, running these three large downstream companies, Indian Oil, $100 billion, HPCL, BPCL in the region of 50 to 60, $65 billion. We should do something about at least BPCL and HPCL. So my own sense is that once things stabilize, and if the government can build consensus within the NDA, that's because there are parties which are kind of more left-leaning than others, which are part of the government now. So if they can align, kind of, bring them on the table, then I think the right thing would be to go for privatization of BPCL and HPCL, these two companies. But these companies is important, is done the right way, not the kind of effort we made the last time, where we set a deadline and say, okay, we are going to privatize or disinvest in BPCL by 30th of March and so on. That's not how it's going to work. And at the same time, the government, my own sense is, as part of the energy security doctrine, they should make sure that these companies are privatized and these are board-driven. You don't hand them over to XYZ, whether domestic or overseas. It's important these companies are purely board-driven. There are very few purely board-driven countries in India. As an Indian, I'm very worried. I worry about it. Where are the board-driven companies in India? There are very few. When you look at the large country, majority of companies are either run by joint secretaries of the ministries, or run by promoters. But where are the board-driven companies? So I think here we have BPCL and HPCL, which can be transformed, A, board-driven companies, B, truly owned by stakeholders, equity shareholders, and 3, at the same time, make them future ready. So they can become a kind of template for other companies, including ONGC, Indian Oil, NTPC, to be emulated. So I think a lot of work. I mean, majority of our company in the energy sector, majority, almost 99.9%, they are not future ready. Is NTPC future ready? It's not. ONGC not. Indian Oil not. BPCL not. So there's a lot of work to do for this government, for that matter, we as a whole, the people of the Republic of India.
Okay. Thank you, Mr. Taneja. It's such a pleasure to listen to how the global geopolitics and the market for crude oil changes perceptions and sort of manages the entire global market. Thank you so much for your time. As always, it's a pleasure, and we hope that you will be back with us soon. And let's hope that we have a quiet weekend in the Middle East, and there is peace all around. Thank you so much for your time, sir.
Thank you.
That, ladies and gentlemen, was Mr. Narendra Taneja. He's a very well-known oil expert. The reason why we had him was this continued crisis in the Middle East that is affecting not only peace all around, but also corporate India. Sakshi, 955, flat as flat can be as far as the Nifty is concerned, down 27 points. Bank Nifty was down about 150, is now down just 85. What are the markets telling you?
Well, 24,115, about 0.09% lower for the Nifty. All the sectors barring IT and auto are down in the red, with the FMCG sector losing about over 0.5%. So is the Pharma index. The broader markets about 0.4% down each. IT sector, however, is still holding up about 0.6% higher in trade. Autos and PSU banks are absolutely flat at this point in time. The top mover on the Nifty is TCS with over 1.3% gains. Hindalco, Tech Mahindra, HCL Tech, M&M, SBI are the top movers on the Nifty. So gains in IT, auto and slighter PSU banking counters that are supporting the market sentiment as of now. But a large part of the markets have drifted lower. Hero MotoCorp is the top loser today. Remember, it was higher right ahead of its earnings. Today, it's down by 4%. Divis, Ultratech Cement, Adani Ports, ICICI, Britannia and HUL. These are the top losers on the Nifty right now. The PSE index is absolutely flat at this point in time, but stocks like Oil India, BPCL, IOC, GAIL within the energy pack that we have been discussing is other spaces that are still holding up in trade. F&O movers are Samvardhan Motherson, 4% higher in trade. Aditya Birla Fashion and Retail, Vodafone Idea, Nalco, Balrampur Chini and Canfin Homes are among those top movers within the F&O space. On the downside, you have Max Financial, Piramal Enterprises, Hero Moto and Muthoot Finance as among those that are top laggards at this point in time. The first edition of Market Today will wrap up right here. Many thanks viewers for being with both Shail and me. We'll bid you goodbye for a moment, and we'll be back with several exciting shows throughout the course of the day. So stay tuned on Business Today Television. A lot more is lined up for you. Thank you. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Happiest Minds Technologies that's come out with the earnings. We do have two special guests now joining in from the company to detail for us the earnings insights. Mr. Venkatraman Narayanan, he's the MD and the CFO of Happiest Minds Technologies, is joining in. Warm welcome to you, sir. Thank you so much for taking the time out. We also have with us Mr. Joseph Ananth Raju. He's the Executive Vice Chairman and the CEO